get into another good training. Talk about this amazing business we got a chance to be a part of. Johnny was just making a point before call started when I was talking about fuel prices. It's literally impossible to wake up and not participate in this market, even from a standpoint of not trading. But it's literally impossible to wake up and go out through your day and not consume or use these commodities, Barbara. You can't do it. You just can't do it. So if we use and consume these products, obviously we must believe in them. So we, why not learn how to use them and trade them in the market from that standpoint, right? So yeah, let's talk about my favorite subject. And before we do that, let's get into talking about how we're gonna stay compliant and turn this over to Barbara so we can stay in our normal fashion. So over to you, Barbara.
Yes, sir. Here's our disclaimer for our futures and commodities trading group 101. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities.
All right. Thank you, Barbara. Well, I think we had one quiz, Barbara, or maybe
Um,
two. Maybe two.
I think we had two quizzes. Yes, we did. We had two. The first one is when you are looking to enter a trade, you should look for the contract month with the lowest open interest and volume. A, false. B, true. C, not sure.
False.
Right, y'all. What you say, Pam?
False.
Paul
False?
said false. Pam says false. Anybody disagree?
Mm.
Natural Sister says false. False it is. I think they got it right.
Yeah, right. Well, Barbara, let me ask this. Is there anybody not sure about that quiz? Anyone not sure about that? Okay, well, let's make a part two to that quiz then. Why would you not want to enter into a contract that has the lowest volume and the lowest uh, open entry out of all the other contracts?
Because the
Make it
liquidity
hard
will
to
be
get
low.
out. I'm
Say
sorry.
it again. Wait a minute. Hold on. Oh, wait a minute. Come on there, big dog. Talk to me again.
Hey man, don't do that, man. Don't blow me up, son.
No,
The
no,
liquid
man. I want
the
everybody to hear
liquidity
that.
the liquidity will be low.
There you go. There you go.
Yeah.
Y'all understand what Jamal's saying? We want to have a contract month. We trading well. We won't have no problem getting in or out of the contract. Everybody understand that?
Yes,
Yes.
sir.
The higher the open interest, the higher the volume, the better.
Okay.
Awesome.
All right, second quiz. High volatility in the market means that no one is watching and the market is quiet. A, true. B, false. C, not sure.
False.
I lied around here.
False.
Somebody's watching.
Yeah.
Always feel like
Somebody's
Somebody
watching me.
jacking me, and I have no privacy. Oh, I could give y'all a quiz on that song right there, boy. Woo. But we ain't gonna even go there. Hmm. I bet you nobody in the room would get it neither. Hmm. So everybody clear on this one? That we got the correct answer?
Yes.
Yes.
Anybody feel different about um the answer being false? Anybody not sure? All right, what's the answer, Barbara?
High volatility means a lot of people is watching. That market is on the move.
Everybody's
It's
watching.
total opposite. A lot of eyes is on that market, and like Jamal said, liquidity.
Hmm. Yeah, just know, guys, when we see a market that's trading sideways and it's making, real small candles, real small bars, that's the volatility is real low. It's quiet, and that's why that answer is false. So great job again. Most important thing I want y'all to understand is we y'all remember what Johnny taught us about what we bring to the market and our importance when we get into the market. And that's where this comes into play, what we're talking about in these quizzes. This is how important we are. That liquidity comes from all of you. There's more of you than anybody else in the market. So the more open interest, the more volume, the better it is for the people who are buying and selling. All right. What we got? What we got there, Bob? We got some people coming in the room tonight with not identifying who they are. We
Well, we
definitely
know
want
who
to know.
AW. We know who AW is.
What about Zoom? Somebody just
That's
said Zoom. Okay, you on top of it, Johnny? All right,
yeah.
appreciate it. So what's the lesson? Well, Commodity 101, lesson 9. All right. So are we talking about the formations tonight, Miss Barbara?
Yes, I was muted. Please forgive me. We start the series on formations. Tonight starts the bottom formation of the three formations that we discussed. And this lesson can be found in lesson 7 in the manual Futures and Commodities 101.
Okay.
I would love just to recap and just get some feedback, get some testimonies, feedback of how the experience of the first Travel and Trade Workshop Retreat went, and just to check the pulse. Let's get the energy from the event, man, and start the call that way. All right with you?
Yes, sir. Absolutely. Thank you for letting me be part of the decision making.
Absolutely, man.
It's like speechless. It really woke my wife up as well. Both of us coming out here. So this is, to me, in reference to everyone, sitting on a call every Sunday night is no comparison to actually being live and to be right beside Delvin, and you can ask him Q&A questions and he can actually answer them, and you can take those notes and he can assist you. So to me, I would say to everyone, it's a life-changing event. And I know in my heart, I'm going back for the next 30 days doing paper trading, and then we are going live, my wife and I, to start doing this, because it was just an eye-opener to see it. And as well, Johnny, when you came on the call, you had some good examples in reference to explaining how you, told us. So again, it's speechless. And I thank Delvin so much for putting this together. So it's a life-changing event for my wife and I. So we are excited, and we are looking forward to the next event. We will be testimonies.
Can I say something? I don't believe in commodities before I came. I listen John every Sunday, and I was in the room in the kitchen, but I was listening and saying, oh my God, this is too difficult for me, because I don't understand nothing. Maybe that's the same mentality that a lot of people has, because they don't learn the skill set. But something happened yesterday. My first time listening, delving with my 1,000 attention, and I love it now. I say, John, we go ahead. Now we can go ahead. Look how much information I can get in only one day.
Man, I think I talk too much.
Those are the formations in detail.
Wow.
I love it now.
Oh my goodness. And Rosa, you came with no intentions of getting involved, right? You just wanted to be here for John.
Nothing at all. I just came to support him.
That's it. And meeting everybody, making new friends, and then I see at one point you got up off the sofa and came and sat on the floor, got closer to me as I was presenting. I was like, okay, she came a little closer. You was really into your notes.
Uh-huh. I was taking notes the whole day.
Wow.
Awesome.
I'm passionate now. It's so amazing.
Yeah.
Yeah. And this is your first time in Arizona?
Yes. Very pretty. Guys, it's so pretty.
Yeah.
I never imagined it's very pretty.
And one thing was nice, we can tell everybody, Delvin only gave us a piece of the pie. This was a one-day event. Can you imagine a 2-day event? And Delvin does a 2-day event explaining the futures one day and just drilling options the next. Just imagine. Wow. So, hey, we're excited. We're going to, get rolling with futures commodities. And then, hey, we're looking forward to the next event of some intense training with options as well.
You know something that also I like it? I met people from different states. So the connection was so good. We talk a lot every night. We have fun. One night we went to bowling.
Yeah.
It was so good. They came people from Pennsylvania.
Yeah.
Alabama, Georgia, Atlanta, Georgia, Nevada, Virginia, and Dominican Republic.
Awesome.
Oh man, I want to thank you both for coming on and sharing your experience, and just let you know it was wonderful having you guys here. I've known John for several years. We met on the cruise, and met you over the phone, but finally got a chance to meet you in person and spent some time together. And it felt so personal and intimate having y'all here staying at the house where we were able to just spend all this quality time together. So Thank y'all for making the trip, man. And congratulations to you, John, being the person that traveled the farthest to get out here. That shows your commitment and how serious you are about what we're doing with this trade, man.
Amen. Amen. Yes. Thank you again. We appreciate everything. Your wisdom, and I can't. You just what is it? Just humble, man. Humble guy, man. Looking to change the world and help the world. So hey, we thank you.
Appreciate that. And anybody else would like to share any takeaways or your experience?
Behind every good man is a good woman. Wow.
Nothing but the truth right there, man. All right, well, what you don't threw some up on this screen? We don't know what this is. What's this?
So this happens to be the very book that you guys learn from on the call every Sunday night. It's called Futures and Commodities 101. Delvin, Dr. Melba, myself, Mr. Johnny, we want you to get this book. It helps to have something tangible that you can flip the pages every day. And we go by what's in the book and we expand and give even more information. Just want to give a special thanks to everybody that took the time to purchase it, and please leave us a review. If you're considering getting it, please let me put your consideration to rest. Please get it. It will help you learn about the futures and commodities market, brokers, risk management, formations. It's Delvin's. What he did was take over 30 years of his learning and what he learned from his mentor, and he put that in this manual. And that's why it's important that everyone on the call gets it. And so we thank you. Please don't forget to leave the review.
Hey, Delvin, as
Sure.
as the have the guys at J. O'Brien or been able to review or look at the book? Have you got any comments from them?
You know what? I keep saying I'm gonna share it with them, Johnny, and they don't even know about it unless they find out another way. But I keep saying I'm gonna share it with them, and I haven't.
Okay.
Yeah.
Well, should we give some special thanks?
Yes. Special thanks to the CME Group. That's the largest trading exchange on the planet. We thank them for their videos, and the education that we share with you every Sunday night comes from the CME Group. And also, we never want to forget about our favorite go-to platform, barchart.com. If you don't have a free barchart.com account, please log on. It takes literally about a minute and a half, not even that, to get set up with barchart.com, so you can start learning the marketplace with everyone else on the call. All right, Mr. Johnny.
Get us started, my friend.
How about if I unmute my mic? What is a bottom formation? I want to tell you a story here real quick. I was introduced to a brokerage firm in Australia this week, and they called me to evaluate my trading skills, to see if they wanted me as a customer or not. And and I told them, I said, they go, well, what do you think of this? What do you think of this market that's going on right now? I said, volatile as hell. You know, a lot of volatility. And that's where you make your money. However, what we teach is very conservative. We're looking for signals that indicate a top formation, a bottom formation. We're looking for sideways troughs, right? We're looking for trends. We're looking for places to enter the market. And then we also have a strategy on where to exit the market. Okay. So we've talked about top formations. Now we want to talk about bottom formations. Just the opposite. Okay. A bottom formation suggests a reversal in the market direction, indicating a transition from bearish to bullish trend. It's typically developed after an extended downtrend when prices begin to stabilize or we are hitting support. Okay. Next slide. Just like a top formation, we're looking for a 1, 2, 3 bottom. So how do we figure that out? We go to the lowest part in the chart, which indicates the number 1. The number 2 would be a reversal going the opposite direction. And then a number 3 would be going back towards the number 1, but failing to make a new number 1. And if it continues on, then we're going to have a series of higher highs and higher lows. All right, so next slide. All right. Just like I said, the number 1 is the lowest place on the chart. All right, which is the support level. It will reverse and go higher until it hits resistance, the ceiling. And if it fails, it will reverse back towards support. All right. If it fails to make a new number 1, a new low, we call that the number 3. And then number 3 is when it reverses direction again and heads back towards the number 2. Next slide. We like to see a 10 to 14 day confirmation when we're looking for a complete 1, 2, 3 bottom or 1, 2, 3 top. We don't always get that. Sometimes, a lot of times, depending on the volatility of the market, once it makes its turn, it's off to the races. Okay.
Johnny, can I say something right here on this?
Absolutely.
Like Johnny said, we like to see this time frame when he's forming that bottom formation. Not gonna always be within that time frame, but that's the one we prefer within a 10 to 14 day. And the reason you really don't want to see a formation form longer than 14 days because most of the time when it does, not all, but most of the time when it does, it's quite a good distance between the number two and the number three. So if it takes longer than 14 days, a lot of times that number three will be a long way away from the number two, which means that you're going to have a substantial stop loss if you were to take that trade. So that's why that time frame kind of comes into play. If you're forming one, two, three within 10 to 14 days, it's normally going to be pretty good where you won't have to have such a crazy stop loss. I hope everybody understands that. But I just wanted to implement that point, Johnny. All right.
Yes, sir. Any other? So if you can see this on the chart, it's pretty easy. So if you want, can you go to bar charts? Come up with a.
So do you enter the trade when you're around two?
Just above the two.
Just above the two. Okay.
Mm-hmm.
But do you have to go? You should have watched it for 10 days, right?
Yeah,
10.
we're gonna show you, Brenda.
Okay.
Okay. So here's soybeans, and so it show market number one, please. Number two. And a number three. All right. So this demonstrates that there's been a reversal.
Mm-hmm.
And folks, you can see this on every chart. I don't care if it's stocks, whether it's crypto, whatever. This can be utilized on anything we trade. Forex, whatever. All right. Now, what we're trying to do, and Brenda, what we're trying to do here, everybody, we're trying to reduce the risk.
Right.
Okay. So let me give you an example. The number one is an all-time low.
Mm-hmm.
I'm going to jump in the market. It ain't never been this low.
Mm-hmm.
It goes up and hits number two,
Mm-hmm.
and then it comes down and crashes. And I lose my tail.
Yeah.
Because I wasn't able to pick the bottom of the market.
Mm-hmm.
Okay.
Mm-hmm.
So in this instance, it went up, it came back, but it failed to meet the number. It failed to make a new number one.
Mm-hmm.
Okay.
Because
So,
it stayed low. Okay, I got you.
all right.
Mm-hmm.
So we want the market to come to us. So, Barbara, can you draw a line where we would want to enter the market?
Mm.
Well, wait a minute. I'm giving up a lot of profit here.
Mm-hmm.
Oh, but guess what happened? As soon as we got in, the market turned up against us.
Mm-hmm.
It started back down. But if our stop loss was at the number three, okay, if that represents 10% of your holdings,
Mm-hmm.
then it went back down. Guess what? It made a higher low.
Mm-hmm.
So do me a favor, put another 2-3 in there, Barbara. Okay. So if you miss this trade,
Mm-hmm.
if it is a true uptrend, then if we miss the first 2, 3, then we would do the same on the next 2, 3
Mm-hmm.
to enter the market. Okay. So what this is doing, this is reducing the risk of being wrong. But once it takes off and we're right,
Mm-hmm.
we can ride this as long as it'll take us to right. Okay.
Mm-hmm. So basically, we would come back in where Barbara put the purple. We would come back in there so we could get that ride up, right, to the next
If
two.
we missed it the first time.
Okay, got you.
Okay. So we're looking for a 1, 2, 3 bottom,
Mm-hmm.
and then our entry point is just above the number 2. That's when it confirms. And then once we do that, we ride it all the way up and we increase our stop loss until it
Mm-hmm.
does a reversal.
Right, got you.
And just FYI, Delvin never sells out of a market. He gets stopped out. Meaning he wants to preserve as much profit as he can. And when the market turns, he'll get stopped out and he'll take his profit. Because there's no way in the world that you know that that's the top of the market
Right.
until it does a 1, 2, 3 top.
Hey, Johnny, can I point out something here?
Yes, sir.
I just want to make sure everybody's aware. Had you taken this trade, had you taken this trade, would this have been a profitable trade, Barbara?
Very much
Um,
so.
yeah,
Yeah, it's all the way up there. Very much so.
but you have to change your stop, right?
Well,
Yeah, yeah.
let's just
We've
can
had to get
this
out by
is
now though, but
this is
Yeah.
soybean. Can we calculate it real quick?
yes, sir.
Everybody remembers the point value?
Everybody should know this by heart.
Anybody remember the point value?
Is it the 5,000?
Well,
That's how many
that's the
bushels
contract
there are.
size.
Oh, okay. Wrong.
Is it $50? 50.
There you go.
$50.
I was
For
close.
every point, it's $50. So how many points do we have here? If our entry point is $10.83, right? And our target or where we got out was 12.32.
Oh, yeah.
About 33.
Says right there. Ain't that amazing? You'd have made 7,451.60.
Yeah. And here's the thing about it, y'all. In this particular case, you had a 1, 2, 3 bottom, and then the market went up to the number 2 and confirmed, meaning that we would have entered just above the number two.
Mm-hmm.
Start trading back down. So you would have been at a loss at this point. And we talk about controlling your emotions.
Oh no, I'm losing my mood.
All right. Think about how many people panicked and got out of this market because it went against them right after they got in it. And then look what happened. That's why we that's why we use the support and resistance level. And what do I mean by that? Those one, two, and three are support and resistance. You heard Johnny said that number one was support, and number two was the ceiling, which is resistance. At number three is another level of support. So we use our formations because they're support and resistance level. But our buy signal is to enter the market when the market trades through that number two. That's our buy signal. But we got our stop loss in place, and at this point, we would have been real profitable had we taken this trade. As you can see, the calculations that Barbara has on the chart.
Mm-hmm.
And Barbara, how many contracts is this, Barbara?
This is only one.
Yeah.
This is the one contract. So,
Can you do me a favor, Barbara? Would you go back and tell me what the margin and the maintenance is on this?
Yes.
Barbara probably must have gave y'all a break. Normally, she has that on the chart.
$2,000.
Yep. 2,200.
Here's
Okay,
what's
so
so fascinating about this, Johnny. Imagine you see this formation
$2,200.
and you don't have this type of account size, but you see this on the chart. This same chart is gonna look the same way on the mini soybeans and on the micro soybeans. It's gonna have the same formation on the chart with a less margin in maintenance. So everyone can take advantage of it.
can I ask a question?
Mm-hmm.
Delvin, the 2,200, is that what I'm paying for the contract? Is it?
No.
It's not.
Mm-mm.
What am I doing? What's that 2,000 for?
That's the amount you're
And you,
supposed to keep in your account.
What's it called?
Maintenance?
No, deposit. Excuse me. I'm sorry. It jumped out. It's my deposit.
Oh,
that's it.
I'm not paying nothing for this contract.
Not a thing.
I'm just saying I got 2,002. So if I got 5,000 in my account, can I get into this account? Into this trade?
yes.
Yep.
But
Absolutely.
am I risking $2,200 or half of my account?
Yeah.
Yeah. The 2,000.
Or
Yeah.
Am I risking $2,200?
Oh, no, you're not. You're not
no, you're not.
because,
You're not losing nothing.
yeah, you're not. Yeah.
Because why am I not risking $2,200?
Hold on.
Come on, folks. This is
Yeah. I'm
easy.
really,
Hold on.
hold on. Hold
It's a
on.
basic.
Your risk is 2,000 is 1,648.40.
Am I risking that much? Can I determine how much I want to risk?
Uh,
Absolutely.
Yes.
So
Yeah, I would say
Yes.
yes.
let me ask you a
Absolutely.
question.
Yes.
What's the
If
point
you get
value?
50,
50. Yeah.
So if I put my stop loss at 10 points, how much am I going to lose?
$500.
$500.
$100.
And what does $500 represent
10%.
if I have 5,000 in my account?
10%.
10%.
Dot, dot, dot. Did y'all get that?
Yeah.
Yeah. You
I'm
Okay.
don't
not
risk no
paying
more than
Got
10%.
2,200. I've
no.
got that in my account, but I'm going to put a stop loss in to where I'm only risking 10.
10%. I'm sorry, I'm writing this down.
Always remember, guys, this is what Johnny's trying to make y'all understand. Always remember the way we trade, we are in control of how we are entering and how we are trading in the market. We're in control of where we want to get in, and we are in control of how much we want to risk. That's why we use the stop loss and we use our golden rule. This is what Johnny's pointing out. Keep in mind, just because you have a $2,000 margin doesn't mean you're risking $2,000. You determine how much you're going to risk on the trade by where you place your what.
Your stop.
There you go.
Yeah. Stop.
So if you say I only want to risk 4 cents, which or 4 points on this trade, how much are you risking on the trade?
$200.
Yeah.
$200, not
hmm
2,000.
Nope.
Everybody understand that?
Yes.
Yeah.
Yes.
Yes.
I like that too. Control.
Me too. Like Johnny said, this is your good faith deposit. This margin that you have to have. It doesn't mean that's how much you're risking because you enter into a trade with a margin of 2,000. That don't mean okay, I'm risking 2,000 on this trade. Where you place that stop loss determines that. All right,
hmm
Absolutely.
Okay.
So why would someone say not to use the stop loss?
right. Oh, you heard what I was saying before the call, Brenda?
Yeah, I did,
Glory.
but I didn't understand why. Now I understand why. That they're just kind of ignorant to some degree.
I
They just
hope
Well,
want
you
to
they
know,
throw their
were.
money away.
I hope they were
sometimes we
doing the
sometimes
season.
we trade with ego, and then sometimes it's lack of knowledge, lack of understanding, and then sometimes we get to a point where our emotions take over. We keep getting stopped out of the market, and we decide we don't want to get stopped out of the market, so we're not going to use the stop loss. I've been there,
Oh,
done that. So it's several reasons to why this person could be feeling that way, and then sometimes there are some people who have such a large account that they feel they can ride the market out. They don't need a stop loss. Does that make sense?
No,
Yeah.
that don't make sense to me.
Yeah. So they feel like, well, let me look how low is this market gonna go? They think they can pick the bottom of where the market can go, and they got an account size that's large enough to handle if the market goes against them. They just gonna ride it out, be at a huge loss for a point, but it's gonna turn around. People trade this way. This is why we are teaching you guys. Like Johnny said, we want to minimize our risk. We don't want to trade like this. Me and Johnny's, we've been there, done that crazy stuff before. That's why we're trying to teach y'all the
Please.
proper way.
Yeah.
because it's kind of like just giving money away, right? Not
Well,
using the
It's
stop.
gambling.
it's like going to Vegas.
It's
What you say,
gambling.
Johnny?
It's it's gambling.
Exactly. Yeah.
Okay.
Okay. So let me take this one step further. Barbara, help me out here. If you entered the market at the first two, all right, where we have the entry 1083 and 3/4. How far did the market go down? That number, uh, how far did it go down before it turned back around? The number three.
Number three is that 1050?
1063.
Yeah,
right
yeah,
there.
yeah. It looks like 10 something. 10.
10 points. All right. The number, so the first number 3, where we got the first red mark at 10, 10.50, 10.49 and 3/4.
Mm-hmm.
All right. How much are you risking on that trade? 10.49 versus what is that? 10.83.
Mm-hmm.
How much were we risking? Well, it says right here, we were risking 16.48, right?
Mm-hmm.
That is you if you had a $5,000 account, you would have probably got real close to being stopped out. Okay. If you had a $10,000 account, then it didn't bother you.
No, you would have been rolled.
Okay. Now, the question, so if you had got stopped out, you would have lost $500.
Yeah.
Correct?
Mm-hmm.
Now, as this thing takes off, we keep moving our stop line. So here's what I want y'all to understand. Find me another place on the chart. Um, let's say, see where the high is there on the just under where it says 53 days. Right there. Yeah, put a mark right there, please. Now, why do you think that I put a mark there? Can somebody tell me? It's your smart.
Yeah. Is it a stop or I'm not sure.
No,
The
but
the market had reversed and now it's making a new.
no.
No.
A previous resistance can become new support. So notice what happened when it hit that level. It flattened out.
Mm-hmm.
Okay.
Hold
That
on,
means
Mr.
that
Johnny. Say that one more time. Previous resistance can
previous
become,
resistance
Previous. Okay.
all right.
can become new support, or and you can see where the twos are. It doesn't want to get back down below that two. All right.
Right.
Previous resistance.
So because we're getting higher highs and higher lows, but a previous resistance can also serve as resistance. All right.
Okay.
So at that point in time, that new support will become, I would use that as a stop loss. My stop loss better be moving up as this thing moves up in an uptrend.
Mm-hmm.
But you can look at other places in the chart to get suggestions. Would you agree with that?
Absolutely. I want to make sure everybody understood what you just said. Did everybody understand what Johnny just explained to you all?
That's why I had the question because I was following.
Okay. So when Johnny was explaining, we watched a video last week that explained the exact same thing Johnny just talked about. How resistance can become support and support can become resistance. So if you're understanding what Johnny is talking about, you see when the market broke off into a good uptrend after you got filled. It
Mm-hmm.
went down,
Mm-hmm.
and then the market turned around, and we had this nice uptrend all the way up to that line Johnny had Barbara to draw. Everybody see that?
Mm-hmm.
When we looking at charts, Barbara, we always look where? Look to the what?
You always look to the left. We call it traffic. You always look for traffic, support and resistance levels.
Always look to the left. If you look all the way to your left, that line that Johnny had Barbara draw, do you see the resistance at the end of that right there where Barbara's highlighting it? Do you see that?
Mm-hmm. Mm-hmm.
Yes.
When the market traded up to that
Yes.
level, you see why Johnny had her draw the line right there?
Mm-hmm.
That was resistance to the left. But what happened when the market traded through it?
It went up. It still went up.
That became support. That's what Johnny just explained to you all. It was resistance when it was over to the left, but now that same area on the chart is now resistance.
Uh,
The market comes
yeah,
back down to that level. That level is resistance now.
Mm,
I
okay.
see it. I see it. I see it.
Do you see that?
And then
Yeah.
on the other side, it becomes support again.
Mm-hmm.
And then on the other side, it becomes
Yeah.
support again. Do y'all remember the
Wow.
video we watched last week? If you don't, it's okay. Do everybody remember the video, the little short video we watched last week?
I wasn't here, so I don't think I don't know if I was or not. We done slept through a
Barbara, let me ask you a question. I don't know, but just out of curiosity, I know we haven't finished your slides for this week, but how difficult is it to go back to last week's video, that support resistance video?
I could go right back to it. It's still in queue. I can go right
We
back.
watched a little short video, and Johnny asked, did y'all catch all that great information? Please pay attention.
Support and resistance are common terms that traders use to describe levels where price is more likely to stop moving in one direction or change direction. Support refers to levels where price might reverse and move higher, or it can be a level that slows the momentum of price moving down. Resistance refers to levels where price might reverse and move lower, or it can be a level that slows the momentum of price moving up. Support or resistance are determined by the trader. Price breaks through support or resistance. These levels will reverse. Support will become resistance, and resistance will become support. For example, in this chart it shows the level of price resistance that held for over a year, where price was not able to move higher. Once this level was finally broken, price trended higher. The first retracement of the move up could only make it back to approximately the same level that the price was not able to break previously. Support and resistance can also be observed at certain price levels. For example, specific prices will create levels where price will find support or resistance because this is where there is potentially increased interest in trading that particular market.
Everybody get that?
Mm-hmm.
Yes.
Yeah, got it.
Did that
Absolutely.
did that make sense to everybody? If it
Yes.
didn't, it's
Mm-hmm.
okay. That's why we're talking about it.
No, it made sense.
Yes, it
After
makes sense.
Johnny's explanation and then showing the video, it makes sense.
Yeah. Yeah.
So you
Exactly.
Definitely.
understand what Johnny talked about resistance becoming support.
Mm-hmm.
Over to the left, well, you see it colored in. If that level was resistance, the market traded through that level. That same level became support.
Mm-hmm.
That's what Johnny is explaining. Everybody understands this.
Yeah.
Yes.
Okay. One thing we're gonna happen by the time y'all get through with this course, you're gonna know how to read a chart.
Mm-hmm.
That's for sure.
Yeah. All right, Johnny. Anything you want to cover on this chart? Or that's it for this chart.
I think we've done a good job of Well, the key for tonight was to understand a 1, 2, 3 bottom. We covered how to enter the market. We did cover stop loss to a degree. We'll do it more, and then we, explain that we definitely want to ride this market as long as possible, but we want to increase our stop loss to reduce our risk as we go up. We're going to cover that more in detail too.
Exactly. Barbara, did we have more to go on your slide? I thought you had more.
No, this was it.
This was it.
Yes,
Okay.
sir.
Now, we covered bottom formation tonight, but here's the great news about when it comes to what we watch for on the charts. We're only looking for 3 formations, so I don't want you to be feeling overwhelmed. We're not looking for a whole lot of stuff. Just 3 formations. Just the first one. We're just looking for 3 formations. So take a deep breath, exhale, whatever you need to do. Just know that we're not watching for a lot of stuff. Tonight we're covering one of the formations that we look for. Let's go ahead and open up for Q&A. Anybody got any questions or comments or what we went over this evening?